I wanted to get into inflation versus deflation. Now, there's a lot of debate right now between the most heavy-hitting economists out there, the guys that I love listening to, that I learned everything I know from. These guys are all disagreeing. You got the Michael Burrys and Peter Schiffs of the world who are saying hyperinflation. You got Dr. Lacey Hunt and guys like Jeff Snyder saying deflation. Now, what is the key difference in inflation versus deflation? It's simple. During inflation, asset prices go up. During deflation, asset prices go down. And this is based on three simple things. So one is the money supply. Example of that would be a gold standard system versus a fiat system standard. And gold is a limited money supply. Therefore, the gold standard was a deflationary type of economy. That's why we got off of it, because we needed to expand as an economy. Second is economic output. So the more goods and services produced in an economy means that economy is growing because there's more jobs being created, more money being spent. Third is interest rates. Now, when interest rates are low, it expands the economy because it's cheaper to borrow money. When interest rates go up, debt payments cost more money. And in macroeconomics, the payment of debt is the destruction of money, because it's money that would have otherwise been spent to the economy being taken out of the economy and spent on debt repayments. So the deflation argument is pretty much based around the fact that once goods and services get too expensive, they are naturally rejected by the customer. And a good example of this is gas. So when gas gets really expensive, people start to factor in the price of gas when considering if they're going to go to a certain place. Every trip isn't necessary, and if gas is $2 a gallon versus $4 a gallon, that affects the decisions of a lot of people, whether or not they're willing to make a 30-minute drive somewhere. Now, think of the trickle-down effect of that. All the money you could even say that the increase of goods and services is the destruction of money in a way, because it's money that would have been spent elsewhere being consumed by the rising prices of things. So in the deflation argument, people stop spending money on a lot of goods and services, and the prices naturally come down that way, but that leads to the loss of money in the economy, and the loss of jobs and lower asset prices. Now, the inflation argument is obviously the fact that there's been a massive amount of stimulus in the last 2 years, and the production of goods and services went down. Now, really the only thing that's kept us from having hyperinflation is the fact that that oil has to be purchased in dollars everywhere, and the production of goods and services is kept up because of innovation, but that's a whole nother tangent. So what's my opinion on the inflation versus deflation debate? I think it's 100% dependent on what the Fed does. It should not be like that when you really look at the mechanics of how things work, but the market is so psychologically and narrative based right now around what the Fed says that if the Fed raises interest rates, deflation is on, and if they keep interest rates low, then we might see hyperinflation. Or I don't know, the real road to hyperinflation would be if like this Russia-China situation where they're trying to go around the dollar when purchasing oil, which, like I said, that's a whole other thing. But the dollar has been artificially propped up in strength because of the basically international law that you have to buy oil in dollars. But anyway, I'm a big fan of macroeconomics. Still trying to feel out how much you guys vibe with this kind of stuff, but let me know what you think.